2 weeks ago I knew nothing about money market funds, and that's okay because since then I have embarked on a voyage of discovery to find out all I need to know about money market funds and how they might help me reach my financial goals. But since I put in all that effort, I thought it would be a real waste to keep that experience to myself, so here it is. As jargon free as possible, I'm going to explain everything as best I can from what a money market fund is, how it works, pros and cons, compared to other places that you could put your cash. So it is a beginner's guide to money market funds by a beginner. So before we really get into the meat and potatoes here, it should go without saying that nothing in this video should be considered financial advice. This stuff is relatively new to me and I'm not a financial advisor nor qualified in any way whatsoever. I do like to invest though, so what I find out I like to share. Any kind of investment means obviously that your capital is at risk and you may get back less than you put in. It's also worth noting that this video contains paid financial promotions and the link in the description supports me as a creator by way of affiliate commission. So if you do use those links, I'll get a little bit of kickback off those. So with all that, as clear as day, let's get on with it. This article landed on my desk talking about money market funds attracting huge chunks of money. A money market... what? A money market something or other. Now that might sound embarrassing to not know what a money market fund is, all things considered, this YouTube channel and whatnot, but those are the facts. So I did what every right-minded soul does these days. For quick answers, I'm straight on to ChatGPT. But that was just the beginning. What I got back was a reasonable enough explanation, but since I promised jargon free, we'll break this down in just a second. So here's what our AI overlords responded with. A money market fund is a type of mutual fund that invests in short-term, low-risk and highly liquid securities. These funds are designed to provide investors with a safe place to park their cash and earn a modest return while preserving capital and maintaining liquidity. Money market funds are often considered a suitable option for investors seeking a stable and conservative investment vehicle.
Let me break it down for you real quick.
So a mutual fund is a kind of investment offered by a management company that pools the money from multiple investors into one big pot, and this big pot is then invested in a range of things like stocks, bonds, money markets or other assets like these. And then there's quite a number of advantages that a mutual fund can offer. Access to some instruments, that's things you can invest in. It can be quite expensive on an individual basis, so by pooling all the money and the resources into one place, then potentially more options open up to the managers of the mutual fund. Economies of scale come into play very much in this scenario. It's also true that mutual funds are usually highly liquid, which means individuals can usually buy and sell their positions very quickly. Nobody gets tied into anything for any huge lengths of time, and that obviously has its advantages. So a money market fund then is one of these mutual funds that invest specifically in products that are low risk and low return. And as we can see from this screenshot here, according to the Synthetic Risk and Reward Indicator, the SRRI, the level of risk is one which is considered to be very low risk. The fund invests in things known as cash equivalents, not cash exactly like you would have in your current accounts or your debit accounts, but things that are considered very close to it. A variety of short-term, highly liquid and low-risk financial instruments. So we'll take that a step further. A money market fund is a type of mutual fund that is as close to cash as you can get. So what exactly are you going to find inside a money market fund? It gets a bit dry here, but bear with me for just a second. I'll keep it brief because I want to get into an example in just a minute and have a look through a money market fund on one of the investing apps that I use. So one instrument you might find in a money market fund is treasury bills, considered one of the most cash-like instruments you can get your hands on due to the high credit quality and very short maturities. They're issued by the government, backed by the government, so they're considered a very safe choice to invest in. Another you might find in a money market fund are repurchase agreements. These again are short-term agreements where one party sells securities to another with the promise to repurchase them at a slightly higher price in a specified future date. The fine details are not overly important for this conversation. It's important to note that there's always some level of risk involved. They are subject to fluctuations in interest rates, credit risk changes and overall market conditions. Nothing is a sure thing. So why would you choose to invest in a money market fund then? Well, I've touched on the main advantages already, but the appeal of money market funds are threefold. One, they're very liquid. You can turn your investment into cash again very quickly if you find that money market funds aren't for you for whatever reason. Second thing is they're really short term, so you're never locked into a particular rate of return for very long. If you don't like the rate, you can move your money somewhere else pretty quickly. And lastly, considered very safe, but as I say, not infallible, and that's due to the high credit rating of the investments. This means that the folks who have borrowed are very unlikely to fail to pay that money back to the lender. So with all these things in mind, you might choose to use a money market fund if you're holding cash for whatever reason and want to try to get a better return than perhaps an easy access bank account, for example. Another reason to consider money market funds is if you are seeking to diversify a portfolio of investments. Finally, another good reason to consider investing in money market funds is if you're looking for an interim investment while you consider your next move. Plenty of folks might be moving from one kind of stock investment perhaps to another, or you're waiting for the market just to offer up the right conditions before you want to get investing. Maybe you're even moving from stock market investing to property. Whatever the liquid nature means, you can quickly pivot in and out of money market funds for something else relatively easily. Bear in mind that returns are not guaranteed. You could reasonably expect that you would at least get your capital back when you are exiting your money market fund position. So for every pound or dollar you put into that money market fund, you should be able to withdraw at least that again. So this is beginning to sound a lot like a savings account, isn't it? Well, it does a bit. So while you aren't exactly taking a position in cash like you would with a bank, you are buying cash-like instruments, and from that point of view, you would have to decide if you would be better off just having an easy access bank account with your bank. And that's fine. The issue is that the returns on easy access bank accounts are likely to be a lot lower than the returns that a money market fund aims to make. You can usually expect smaller returns with an easy access account than you would expect to make with a money market fund. If you are prepared to lock up your cash in a bond or a fixed term deposit account with a bank, you might find a fixed rate of return for a fixed amount of money to be more beneficial in your circumstances, and of course banks also offer FSCS protection on your investment as standard. So should a beginner really invest in money market funds? Well, there's no better option here when choosing between money market funds or traditional bank accounts, or even investing in other stocks and shares. The more advantageous option really depends on your circumstances, and this beginner's guide to money market funds is not about to try and tell you which you should go for. So look, no beginner's guide to money market funds would be complete without an example. So here goes. Lightyear is one of the platforms that I use that offers money market funds. They've partnered with BlackRock to offer these 3 money market funds. But let's look specifically at the BlackRock ICS Sterling Liquidity Fund for this particular example. So please note that the figures in this video are accurate at the time that I recorded this video. Things may have changed since, and most likely have, since these funds are heavily dependent on current interest rates and are very short in their duration, so please make sure you check the up-to-the-minute info available on the Lightyear app, or simply search for the fund to get all the information you need. Every investment has a purpose, a goal if you like, so what is the point of this money market fund? So the fund aims to maximise income on your investment, consistent with maintaining capital and ensuring its underlying assets can easily be bought or sold in normal market conditions. So that's what it's about. What about the quality? Well, AAA rated is the highest rating you can have for an investment in terms of how safe your capital is. According to Standard & Poor's, the definition is extremely strong capacity to meet its financial commitments. So what kind of returns can you expect investing in this particular money market fund? Well, the headline figure today is 5.4% gross per annum. However, this is based on a one-day yield, and you'll very likely see fluctuations in this return on a fairly frequent basis. This rate will be particularly impacted by the Bank of England interest rate changes. Consider the past decade. Interest rates were at all-time lows with the Bank of England, and so the returns from this particular money market fund would have been really low also. As we see the Bank of England rate rises over the last year or so, we see a rise in the returns of this money market fund. But interest rate rises aren't the only thing that are going to contribute to changes in the returns of money market funds, but they are a huge factor. So there are associated fees with investing in this fund, and I'll address those in just a little bit, but having this figure of 5.4% allows us to make some kind of projections about what this fund could return to you if it were to stay the same. So for example, investing in this BlackRock money market fund with Lightyear could look a bit like this. It's a £50,000 investment, a one-day yield of 5.4%. There's a BlackRock fee of 0.1%. Lightyear would charge you a fee of 0.3%. Your one-day yield net per annum would be 5%. Fees are always a factor, so take into account the provider fee, which is BlackRock in this case, along with any platform fees, Lightyear in this example, and then you can come up with the final figure here. So with this example, it looks like you can get a monthly return of about 208 quid on a £50,000 investment. That's roughly 5%. So if you invest in money market funds outside of an ISA, then you'll also be subject to tax on your gains in the usual manner. In this screen capture here from Interactive Investor, you can see that annual charges vary from 0.1% to 0.5%. The most expensive on this list is 5 times that of the cheapest. They aren't necessarily the worst culprits either, just be sure that you're getting value for whatever fees you pay and it's serving a purpose. It's worth noting that Lightyear currently pay 4.5% on uninvested cash for sterling and US dollar accounts. You can find out more about that on their pricing page, but investing in money market funds likely increase that return ever so slightly. So what does this particular fund actually invest in? Well, the majority of the makeup of this fund is in certificate of deposits, which is very low credit risk and very little interest risk because of the short duration. Indeed, most of the holdings will mature in as little as 1 to 7 days. The BlackRock Sterling Fund currently stands at over 36 billion. It trades once per business day and has high daily liquidity. Overall, it's a very straightforward product and you shouldn't worry about the pace at which you can exit a position. So if you are considering Lightyear as an investing platform for you where you can invest in a range of global ETFs free of charge, then this next video is for you.